All right, we are going to go ahead and get started. First and foremost, I am going to share the Excel sheet, which we do every week. I think I missed 1 week, but I try to go over this every single week, where this is our trend journal that we have. Today is the 13th. I actually haven't done it for today. We did close above the 21-day moving average, so it is a 26. What this is keeping track of how long of trends we have. We had a pretty big down day. This was the biggest down day in QQQ since October, the biggest down day in IWM since I think it was 2022, like April 2022. And so it was a fairly big down day on fairly large volume. Large volume. And so that's one thing we are going to note here. The biggest laggers was IWM and small caps. They were down 4%, over 4%, almost a 5% down day for IWM and for small caps. So a lot of ARM down 18. Um, you had a lot of stuff. Affirm down 12, Upstart 10. A lot of things. Carvana down 5 or 6, which I closed this morning. And so a lot of things were down pretty heavy. And so small caps got hit the most today. And so that's where we are at. We are on our 21-day moving average. So if we do fail that and continue lower tomorrow, that will reset our count after, if we fail it tomorrow, get below the 21-day moving average, and then close the next day. So tomorrow's Wednesday. So if we close Thursday below the 21-day moving average, then that will cut our trend and that will be considered a zero. So by bare minimum, we can have tomorrow, unless it's a heavy down day, tomorrow would be another considered an up day. And then if we break below the 21 day, if we do continue lower, it would be zero. Not expecting that, but that would be a bare minimum of when we could see a trend change. And for my metrics, for how I consider a trend. So next we are going to go to TradingView. So that's all I got on that one. We're going to go to TradingView and check out a couple of the trades that we went over this week, why I got in them and out of them, and then check out a couple of the earnings that just went out, just went off. Lyft specifically is one that I got out of yesterday, and I had mentioned it before I had started recording. One of the biggest reasons I got out of it was because of the IV. The IV of June contracts, which is 4 months away, was over 75. I think it was about an 80 or 85 yesterday for the IV, which is incredibly high. The IVR, the IV rank, which is that tells the historical IV of that specific stock over the last year, was at I think it was about a 70 or 80. So the IV was a lot higher than it normally is. So I got out of it. I was not 100% sure. I wasn't 100% sure about the company. The setup's good, but we weren't continuing to run with the rest of the market. We were kind of consolidating. Well, now we are at 19 and this thing's still going. Holy fucking shit. Yeah, this thing's just going nuts. So my contracts would have been at a 7R, but I got out of them at a minus 2R, minus 0.25R, which was key. And I mean, everything, all of my metrics would have told me to get out. And that's one thing and so like with earnings specifically, one of the things that in my personal trading, I want to have some sort of a buffer in case it does go against you. I don't really like actually doing earnings trades. I would rather just kind of hold a buffer, get in early, hold a buffer. If we were at 14 or so, if we had already broken this consolidation and formed another smaller consolidation above this level, I would have been more apt to hold it. But since yesterday was a heavy down day, it was the heaviest volume we had had in 41 days, and it was higher than this day's volume, which was the day that we got in. then that was telling me, okay, I would rather get out of this. And then today, we closed below the 200-day moving average, closed below this order block I've been watching, and all of that. So that was one of the things where I was like, okay, even if I would have held it into the close of today, that would have told me just with that close, I would have been more likely to get out. And so I'm not too mad about not hitting this whole move. Contracts are going to go crazy. Congratulations to anybody that was more risk adverse and willing to hold through that. For me, not. It's just not in my standards, not what I usually do. And so I am okay with missing out on this specific one. It's sitting at a 7.5 R if you held it. Contracts are probably going to be a couple 100% or more. So that's left. Next, Carvana. Carvana, we got in on this consolidation break right here. Let me turn off the extended hours. Right here, we got in on this consolidation break. Boom, consolidation break. It was a 15-minute orb at the same time. For those that got in with me on stream, I called it out on live stream. And as we were breaking that, that's where we got in. Our stops was just below the previous day low, which kind of made that easy for about a total. What we were looking for was to get up to this $62 level right up here because that was the previous high. I did note as I was looking at it and when I got out of it yesterday, this is one reason why I trimmed half. You have this heavy resistance at 47th right here. Boom, right here in August, right here in July, and again in September. So you do have that heavy kind of resistance right at 57. And I was noticing that on a 15-minute, if you were going in, it wasn't clearing it very strong. Right here, you didn't have a very heavy, strong move above this high. And that's where I trimmed half. So that was a half trim at a 3R. It was right around here. So it was 2.99. So I rounded that up. That was a 3R for me for that half trim. And then with the gap down today, we gapped down and held below the anchored VWAP from Friday and below the anchored VWAP from the day that we got in, which was a sell signal for me. Because we could not hold those anchored VWAPs, I could get rid of that. We undercut half of what we were at. We got out somewhere around here, which was right about a 1.5 to 2R. Actually, it was a 1.1R to be exact. So I'll have to update that in my notes. I looked at it wrong when I closed it and said that was a 2R, so that was actually a 1.1R. And so I did get a little 1R for the rest of my position. So net, it was about 2R for the total position. And if we need to get back into this, if we start bouncing, that's possible. I'll be okay. I don't mind getting back in if we have to. They have earnings again. They have earnings coming up in February. Not a company I fully trust for earnings, so probably not going to be something I trade. I like to trade after earnings. I would rather not trade a stock going into earnings unless it's a run up and then I'm looking to close it before earnings. I don't necessarily like to hold through earnings for the most part. So a couple really, really important things, in my opinion, that happened over the last few days. And it's been two ETFs that I've been talking about that these ETFs are really important for like really growth stocks and a lot of the stocks that I trade. And so that's QQQJ. This is the next gen QQQ, next gen in NASDAQ 100. So this is just a smaller NASDAQ, very similar to an IWM, but more focused on tech stocks instead of IWM being still having a lot of like airlines and banks and things like that. So if you look here, what did we do on, I think it was Monday? What did we do on Monday? Was very, very, very important. and kind of helped show us like, okay, we are probably going to get our pullback soon, is we took this specific high, which what is this? This is the strong high. This strong high created this lowest low here. Boom. And then yesterday, we just barely wicked above it. That's all it really needs. We took out that high though. So now we can come back down, pulled back down immediately today. Fine, we could pull back down, possibly form a base, and then continue to the upside here. This stock is what's going to run a lot of your IPOs. This ETF is going to run a lot of your IPOs, it's going to run a lot of your growth stocks, and your really high beta stocks. So this is one that I watch immensely when I'm really making sure that the whole market is working together with the strongest breath. Next would be the FFTY, which is pretty much the same thing. This is the IBD 50 ETF, which is the IBD's quote top 50 stocks of the market, best performing with the best technicals. We again, same thing. This was our high that created this specific low here. We took it out, held for a day actually, closed above it for, instead of with the QQQJ, we just wicked above it on this one. We closed above it one day, boom, rejected, and now we're continuing lower. And so I'll be looking, I think there's a weekly fair value gap right around here, and then this weekly, and this isn't one to actually trade, by the way. And then this weekly imbalance here. This isn't a ETF that you will actually be trading because the liquidity on this is absolutely trash. But it gives a really good gauge of the market of where we're going to see for a lot of growth stocks, a lot of IPOs, a lot of things like that. For more of a broader market instead of just QQQ is a little more heavily into your mega techs, Nvidia, Apple, Amazon, Google, etc. And so then for not IPOs, but for stocks that had earnings today, it doesn't quite look like it's out yet. So we are going to go to DXY and UJ instead. Last week, what we mentioned was DXY. We're watching to see if DXY was going to hold this 200 moving average or if it was going to fail and pull back below it. We had a good displacement here and a good displacement candle above the 200-day. And now into this fair value gap, which was what we were looking for our reaction. We got our initial reaction, came down, and then we held the 200-day. And that's what I was kind of curious of if it was going to do. We held it, and then with CPI today, we had huge candle continuation. So at this rate, if we are bullish, we're probably going to come to this 106 level, if not even this 107. So when you're bullish, you look for highs. So if we are going to continue bullish, we would most likely come into these levels. We have not closed the weekly candle yet, so this all could change with PPI. If we have PPI tomorrow, so PPI is tomorrow, if we have a bad PPI and it sends, or a good PPI, I guess, and it sends the market skyrocketing and it sends DXY down as a downside reversal on the week, and then we continue down on the week, and that just leaves this as a weekly wick instead of just a huge displacement candle, then I'll be looking for a potential swing high. If we close at the highs like we are now, then I'll be looking for continuation. So as of today, as of right now, we don't have any confirmation until we finish this week. As of right now, it looks strong. It looks like it wants to continue, and it looks like it can take highs. You bounced off your 200-day moving average. You're above your 200-week moving average. You're above all your daily moving averages that are significant. So that could continue higher as long as CPI doesn't do anything crazy tomorrow. And that's kind of the key. CPI has to make sure, or PPI, can't do kind of anything crazy and make QQQ go to all-time highs again, which would be nuts. So next would be UJ, and we mentioned with UJ we had this displacement right here. We were coming into this fair value gap. I mentioned a little breaker I was looking at right here, which it bounced off perfectly. Boom. And I posted this in was this? Yeah. I posted this over in, I've been posting this a lot in Forex chat. So you'll see me putting a lot of levels, a lot of things that I'm looking at for UJ in Forex chat. So I was looking at this this breaker block. I can't remember if I spoke about this in stream or not. Right inside this fair value gap here, we barely wicked underneath and then continued higher. It was phenomenal. And then we just had a consolidation and then a crazy move because of CPI. The cool thing that I really liked on Monday, yeah, it was Monday. So on Sunday, Casper was talking to us about he's been really talking about internal range liquidity versus external range liquidity. And even just in this small move here, regardless of the CPI move, the CPI makes it even better because it really shows it. You have this previous day low into this fair value gap, right? You come down, you pip below it, take out these lows. There's your possible entry if you're on a 1 hour chart. Break this down. Market structure shift right here. Boom, there's your entry with your stops. Here, looking to target the previous day's highs, which would have been right here. So that would have been a 5 to 1. So just kind of reiterating some of the things that Casper talks about in a lot of his streams and showing that like it's really working, and when you really look for it, it's clean as fuck. And so we had a weekly bias, we were looking to go up. We took out the previous day low into a fair value gap, barely wicked below, had a market structure shift, and then continued higher. I mean, that's exactly as he was talking. If you watched it, go back and watch some of his last two streams on his, even just his weekly outlook, that's exactly what he talks about. And so my guess on UJ, there's not a lot holding it back coming from this 151 area. There's pretty much no weekly levels here. This didn't create this low, didn't create a new low, so this would still be considered, in my opinion, a weak high. And I mean, maybe react. This kind of is an order block. Maybe react somewhere around here. This is an OB up here. But at that point, there's almost no reason not to come to this high. Again, we have CPI in the morning, so we could see some kind of wild shit. This daily candle is about to close in 10 minutes. This is a strong ass daily candle. And my trend, I do this trend analysis on UJ as well for the most part. This is still in an uptrend. It's been in an uptrend, and there's no reason to try to short it right now. So UJ's strong as fuck. This has been the strongest currency lately. Euro's been boring. I was looking for a possible swing low here based off of this last week's candle, but it's looking trash now. Unless we bounce really hard. We're in this order block here. So unless we bounce really hard and form a really heavy like close up here in the middle of this candle or at last week's closing, then Euro is just going to kind of look mids to me. These aren't very interesting anymore. Let's see if some earnings are out. I really want to look at Hoods. Hoods plus 327% surprise. Fucking phenomenal. And then we go to here. Minus 0.19. Positive 0.03. Fucking killer. Minus 0.09. Quarter over quarter and year over year up tremendously. One of the first quarters that Robinhood has filed a positive EPS. Reported plus a little bit quarter over quarter. They're about flat for their sales. Year over year, they're pretty good for their sales. Up about 25%. I want to see if did Lyft. Fuck no. Oh my god, Lyft is back down. This was at 16 earlier. Whew. Oh, that makes me feel much better. This will Ivy crush. It needs to stay above 15 to Ivy crush. To stay, if it stays above 15, it's not gonna Ivy crush. If it stays below 15, this will Ivy crush. Sheesh. Boy, Airbnb up to down. Did they report? They are minus 186%, 183%. Good God. Let's look at their Q3 of last year, Q4 2023. 1.9 billion, 2.21 billion. Oh, that was it. Look at this. Minus 0.48. Reported minus negative 0.55. That is, whew, that's bad. That is real, real bad. I don't know how they were up to start. Good God. Okay, okay. And then we had MGM. So far, Robinhood had the best earnings. MGM down. They were decent. 0.1.06 minus 1.53. So I mean, they went from negative to a positive. That's good. They quarter over quarter, they're over 1.06, 0.64, almost 100% quarter over quarter. Revenue about flat, up 10, 1% ish. Yeah, same year over year, revenue about 1%. But so yeah, Airbnb or MGM, decent. Robinhood had the best earnings out of all of them. That's why it's staying up. I really want Carvana's earnings to come out. Because now that they're back down, that's fucked. That makes me feel better about selling it. Alright. Well, that's all I got for today. Um, I don't have too many stocks I'm watching as of right now. I'm kind of allowing, as I said last week, I'm kind of allowing the market to play itself out. We're a little extended, a little long in the tooth, as I showed earlier. We are 26 days into our market rally, so I'm not really looking for too much into buys. As of like I was doing earlier, we closed our lift longs, we closed Carvana, um, and so cutting our positions, trimming, getting exposure, building up cash, and then over the next few weeks looking for a few weeks and or yeah, probably mid March, early April, somewhere around there if the market's cooperating, looking for buys again on more swing trades. So, and we might see a rotation, and if we do start seeing a rotation, we might see some other stocks that are going to go up. Let's look at XOP real quick. No, not really doing anything. Same with XLE. So yeah, I mean, we may see a rotation in something else that might give us opportunities. I'm not gonna force anything though. I'm just gonna stick with what we know, which is growth stocks for me. So once once this kind of we get a little cool down, hopefully, then I'll be looking for more swing trades again. Till then, I'm just kind of cool on it. I'm not going to force anything. We had good profits so far. I think net we're up about 3R for the month, 2.5 or 3R for the month. So, and I did make a trading journal similar to Playboy, so we'll be able to post that too. So that'll be fun. So I appreciate you guys for coming, and I'll post this in YouTube and in the what's it called in the announcements in the recordings. If you guys have any charts you want me to look at, any questions, feel free to ask, feel free to let me know, and I'll check some stuff out too real quick. I do have a few minutes. Gold. Yeah, that's a good one. I haven't looked at gold in a minute. 200 EMA right here. This is where it's going. 1973. I think the dope part is somewhere up here. I think somewhere up here I was like gold's looking to get really it's looking toppy. Yeah, this I mean easy level for me. 200 EMA. This is now a weak low. Did not produce a new high. 1973 is imminent. Look for a bounce. I mean, if we close here, have an inside candle the next day, form a fair value gap. So that would be inside candle Wednesday. Form a fair value gap Wednesday. Then you could get a Thursday trade into that fair value gap down to this low. So that's kind of what I would look for gold. Possibly end of week somewhere down in this level. Yeah, this looks definitely coming down a little bit. Yeah, below the 50, below your 10, below your 30. Yeah, 200 EMA. Tesla. Everybody loves Tesla. So, so everybody's watching this. This is what the majority of the people I see are watching is some sort of falling wedge here. This is what I see a lot of people looking at. Don't really care how you put it. It's something like that. Let me get rid of this moving average. Right. That's what most people are looking at on Tesla. That's what I see. It's what I've seen. But let's look at market structure, not at any trend lines. You have a high here, and this high created this low. This is the lowest point since this high. So now this is our range we are in. We came up, came to almost to the top of this range, but could not break this high. So what happens when you cannot break a high? This is now considered a weak low. And so, in my opinion, this is a weak low. In my opinion, this is a weak low. It depends on how you really want to mark out your structure. But for me, this was the highest point that created this high. This was the biggest swing structure. You could use this, you could use this, depending on what you really want. For me, I'm using this. And so, in my opinion, at bare minimum, I'm looking for this 151. If we bounce here and get above this 200 EMA on the weekly, then I will be a little more convinced. It's got to get above 210 for me to even look at longs. I'm not going to try to call a bottom. I'm not going to try to. I want to trade once I get confirmation. So above this 200 EMA on the weekly, I'm looking at longs. It's below the 200 EMA on the daily. Most of the time, I am not really looking at longs for that when it's below the 200 EMA on the daily. I will say you have a sneaky little mini inverse head and shoulders if you pivot right the fuck here tomorrow. If you absolutely pivot here tomorrow and we have a crazy up day above 195 is probably going to send it to 210. But we have to pivot tomorrow or the next day. We cannot break 175. If we break 175, we're most likely coming to 151. If we pivot here, we could come to 210 or even this 200 EMA. To me, for like the way I trade, I don't trade stocks below 200-day moving averages. I usually will not long something if it's below a 200-day moving average. That's why even if I would have held lift until today, I would have gotten out because it was below the 200. It's just that's how I trade. Good things happen above the 200. Above the 200. Bad things happen below the 200. Just literally look at the life of any stock. Any stock the best time they move is above the 200-day moving average. Any single stock. You can go QQQ and look at when it started moving to the upside above the 200. A declining 200, it's not doing well. Above a rising 200, you're having runs. You're having runs. And so that's just kind of a key note for me is that when it's below the 200, I'm not really looking to get in. I'm not looking at buys. I'm looking more for longs to be shorted. Yeah, but to me, it looks messy. It looks very messy. It doesn't have a great structure. Like, normally I'm looking for like a Wyckoff or like not Wyckoff, it's a Stan Weinstein more for me personally. I'm looking more for a stage analysis. Stage 1 accumulation, stage 2 distribution, stage 3 or stage 1 accumulation, stage 2 markup, stage 3 distribution, stage 4 decline. So what stage is it in right now? I couldn't even tell you because it's so damn sloppy. I would say stage 3 is what it looks like to me, getting ready for a move to the downside. But it's just so sloppy, I can't personally tell, which just tells me I don't want to trade it. Good examples that are stage 1s into stage 2s, so like what we're looking at for breakouts would be just even QQQ. Fuck. Stage 1 right here, as it's breaking above your 200 EMA, creating new highs, now you're in a stage 2. Above the 200 EMA, you're in a stage 2. What's an IPO that just broke out fresh? No, Path. Path here. Boom, stage 1, all this accumulation, breakout, now we're in a stage 2. That's my favorite way to trade. I'm getting in as stocks are turning into stage 2s. And so with Tesla, for me, I have no edge because you're in this large range and there's no real stage analysis here. So it's not really my style. Personally, I think that with markets, I look for relative strength. So I'm looking for stocks that move more than the S&P or the QQQs. Or else might as well play the QQQs or S&P. So if I'm looking for stocks that are moving faster than your indices, Tesla isn't it right now. If you just do a simple comparative and Nasdaq versus Tesla, what would you rather be in? This is Nasdaq. Nasdaq's been ever since here, January 4th, since the new year. Nasdaq's been straight up, Tesla's been straight down. Do I want to get into that? No, not my style. I'd rather just trade the Nasdaq. Any other questions? Any other tickers anybody wants? Sorry if that's brutally honest and just uh Meta needs a base. Fucking hell. Where they move, extended hours for charts feels like mine's missing. It's down here. So if you have to be on like under a daily chart, it's right here. It'll be regular tradings, extended hours tradings. Did Meta hit all-time highs? Yep. Meta hit all-time highs. I mean, bullish until proven otherwise, but you have no real you have no real edge here. And so with me, I would want to see some sort of, where's my path right here? Some sort of like an undercut and then start basing out a little more, pivot above here, and then something like that. So I would like for this to go 2, maybe 3 more weeks sideways, just to kind of build a base. I don't like buying stuff off of small bases like this. If you were to do it, I would look for an undercut of this level right here, undercut here, form uh, a hammer candle, where that would be like this candle right here, an upside reversal. This candle right here. Form a hammer candle, something like this. So undercut this whole level, form a hammer candle above, back in the range, and then that next day above the previous day's highs, that's where you'd get in, with a stop below the previous day low. That's what I would do with Meta to allow it to kind of take it to play itself out, take out some liquidity, and then look to trade back up to the upside. Most likely what you'll see is, where's your 10-day? Yeah, you'll see this 10-day start creeping up. You'll see this 21-day start creeping up. And once that starts hitting and it tapping the 21-day or 10-day, notice it respects the 21 really well. Then that's probably what's going to bounce it. It's a nice chart though. It's holding up really, really well. Considering QQQ had a 1.5% down day and IWM had a 4% down day, and this is only down 1.8. Or no, yeah, this is only down 1.8. Very good. Come on, Lyft, give me your fucking earnings. All right. Any other tickers at all? If not, I'm gonna go ahead and head out, and I'm gonna get ready to get my kids. I'll post once I see some more setups and notice a change in some sort of rotation of where the money is going to be. I'll post that in probably in stock chat or in some notes or something, and that way we can know where the money is going to be coming into next. I appreciate you guys. Thank you for coming. Enjoy the rest of your day, and I'll talk to you again next week.